Let's look at the valuation of Amazon. I'm so fascinated because this is a company everybody wants to, everybody's using, number one. But the other thing is that this is a company that has pursued a very clear long-term rather than short-term strategy. So how is it playing out? Well, I'm going to walk you through my valuation of Amazon here. And remember that what I say here is not a recommendation. It's just my idea about what I am seeing. So I'm going to just blow this up a little bit so you can see it more clearly. That the key thing about Amazon is that the revenue has grown pretty substantially. If we look at the actual revenue growth each year, in the prior years, you can see on this line, it's been accelerating recently to 27, 38, 30.8 and 30.9%. So the question is, what should we forecast going forward? I'm going to say 30%, then down and starting to slow as the company gets bigger and bigger. But still, at the end of this period, 5 years at 20%. The next one is gross profit margin, and this is the most interesting thing because you can see the gross profit margin just steadily climbs. Here it is in 2011 at 22.4, 2012 24.8, 27, 29, 33, 35, 37, and in 2018 40. So this is a combination of two things. First, them being able to move just beyond revenue growth. And the second thing, so in other words, they can start increasing prices, but also AWS has become a major contributor and it's a highly profitable business. So we can see that the EBIT margin, the operating margin, has gone from 1.1 or so, 0.3, 2.33, 2.1, and 5. Now, it's a little bit lumpy because there are some other items that we can see that at times could be loss or it could be revenue. And also we can see massive increases in SG&A, the cost to run the business, basically for the sales, general and administrative expenses. But anyways, let's continue on and look at the assumptions that I'm making. SG&A as a percent of sales has been about 30. If we look at an average, about 35. I'm going to pick 35. And then eventually as scale continues to rise, I'm going to bring that down to 33. That's going to give us an EBIT margin going from 2 to 5.2 up all the way to 12. This is the concept of scale. This is the concept of operating leverage in action. Now, if we look at the other items, the tax rate, and in fact, we can see that Amazon did in fact pay taxes each year, which we can see there. And that tax rate, the effective tax rate, was 36, 33, and about 12 in the most recent year. I'm going to assume they have a tax rate of about 19% going forward. And also, we're going to look down here and be able to see, I'm going to take some of these exceptional items that they've had, for instance, foreign exchange gain or loss. Very difficult to predict, so I'm just going to keep it at this level. And any exceptional items before tax, I'm not going to add in. So there we now can see what's happening. Net margin of this company from 1.7 to 4.3 to 5 to 6 to 7 to 8 to 9. This is the idea of where they are going with their business. Now, if we look over to the right, I've got a little chart that can kind of show you what's really going on here. And from this chart, we can see pretty clearly that this is a story about revenue rising and profit rising quite substantially. Now, I already have forecasted the balance sheet, so I don't think I'm going to go through much detail there for right now, but I'm going to switch over to the discounted val sheet that I use for calculating my discounted valuation. And here we see, of course, this is the United States. If it was in another country such as Thailand, well, these numbers are going to be different, but we're in the US, so let's go back to that for Amazon. And here, I'm going to make a prediction that the market over the future from now into infinity is going to go up by about 9%. The company's beta is going to be about 1.25, so therefore the cost of equity is about 10. Now, we could bring that beta down to 1 to say that the company could, over time, come down to a beta that's lower. In fact, why don't I take the beta to 1.1 to say to infinity, beta is eventually going to come down. Now, we can also look at the cost of debt and the average long-term tax rate, which I'm going to put at 25%, and the debt as a percent of capital, I think, is eventually going to rise. And let's just put it at 15% during the fade period. Now, the fade period is one of the most critical parts of valuation, and that's understanding how things go from a return on invested capital right now of 52.7 down, fading down to the cost of capital, which we can see is 8.8. Now, I'm going to allow this to fade down, not to the cost of capital of 8.8, but to the premium of 20%. I'm going to allow a terminal growth rate of about 4%, and I'm going to say eventually they're going to be paying a dividend of 50%. All of this starts to give me some information, but let's now take a look at the output as we can see it here. And what I'm going to do is go down to the final output on the discount valuation. And here you can see the result. Now I'm going to shoot into another sheet to try to understand this. Now today in this presentation, I'm not going to talk about the PE and price to book. I'm just going to talk about a free cash flow and a dividend discount model valuation. And what you can see is my cost of equity assumptions and all the other assumptions here, my weighted average cost of capital assumptions here, my growth rate. And the main thing we can see from this is that though Amazon doesn't pay a dividend right now, I'm forecasting that eventually they will start to pay a dividend. And that's where the cash flow in the discrete period right here is pretty low, and then it starts to rise, and in the terminal period, it's very high. So from this, what we can do is see that the equity value per share is 1333, 1129, and 1243. Now, right now, the share price appears to be at 1943 in my model. And so from this, we can get a picture of what's going on. Now, the fact is that from a free cash flow perspective, it does not look like Amazon is attractive. That's even with an acceleration in the margin and the profitability of the company. That gives you a wrap on the way I look at valuation through the value model and through the valuation masterclass, which if you want to learn more about valuation, just go to valuationmasterclass.com and I'll see you there.